everyone, Dan Hussey, the Director of Education at ElliotWaveForecast.com here, wanting to take you through the development of a triangle structure here in the Euro-Dollar daily price chart. To begin with, triangles are usually an indication of sideways price action, and using a Fibonacci retracement tool, we are able to actually determine their beginning in existence from an very early on stage. Price is usually defined by continual movement in one direction, and when price moves in one direction, it needs to move further than it retraces in order to consider, or in order to be considered a progressive movement. In the event of a triangle, however, you get both compression on both sides of the market, as well as a failure to progress, and retracements are oftentimes much deeper than what we refer to as a one step forward, two steps forward, one step back, two steps forward type of progression. So without getting too detailed, whenever using a fib tool, it's important to remember that the retracements are there in order to determine the extremity of a particular pullback. And anytime you get a pullback that is more than 50%, the retracement is now becoming, in essence, as powerful or as much as the original progression that you're actually measuring of. So in this case, in the Eurodollar daily chart, we had from March 12th, 2015 through the early September, basically, 2015, late August, we had this first development of three waves into those highs. The first pullback the market did actually was into that 50% retracement in this blue W wave, as suggested by this chart. The market got a nice reaction, however, subsequently failed out of that 50%. In other words, we had our first break of what a progressionary 50% line could have given us. This market could have easily rallied off of that W wave low and continued higher in a larger reversal structure, but it didn't. We headed lower, retested prior lows, and in this case broke our first full 50% retracement. Now, after that initial break, if this market is going to continue lower out of this price range, we would expect it to pull into now a 50% retracement short. Just a rally before the subsequent fall. And while the market did rally into said level, it progressed higher in three waves and actually broke the invalidation zone for any type of progression. And we got a wave structure that went up and tested the prior highs. This was the initial three waves that put us into that triangle or sideways price action mindset. We had a three-wave structure up in a W wave, then three-wave structure down. And at that point in time, we could have been considering this, maybe this could have been three waves up, right? But because we failed out and below prior highs, below this W, red W, and because we failed to break prior lows, we now have compression in the market. So coupled with both sides compressing within each other, and failure to hold 50% lines on both sides of the market, we ended up with a break situation. In other words, we broke 50% longs off the lows, and then we broke 50% shorts off the subsequent rally. That dual breaking is what gave us the range that the market has been inside of now for the better part of this year. And actually since last March of 2015 through all of 2016 and 15, the euro has been sideways inside of this range that the market has been carving out. And whether or not we consider this first three-wave structure to be the A, B, and now C wave of a triangle, or we consider the triangle to have begun after, is irrelevant. If you continue this pattern, you notice that every rally breaks the prior declines 50% short, and every short for a 50% long you draw off of a low to a high breaks the subsequent 50% line, and that pattern just continues time and time again here. And each leg of this structure, you can see how the market likes to tag 61.8 lines on both sides of this market. As compression continues and the market subsequently goes sideways and is carving out a triangle or a range. Now there's other indicators that help us determine this, including oscillators and RSI and other technicals that can help show that compression just in a different way. But I wanted to bring to your attention the idea that triangles can, and sideways price action, can be determined very early on. All you need is that double break. A measurement of a rally, the decline that breaks the first fib, and then the subsequent measurement of that new decline as a rally breaks that fib as well. And after only 1, 2, 3 waves of a subsequent, larger sideways structure that we can then determine, we're able to now see this as a technical range and treat it as such, so that for the remaining chop and sideways price action that is surely to come, we don't get chopped up ourselves and are in effect looking for sideways price action where it exists.